All right, excellent. We have sound. Great. Hello, Timo. Hello, Michael. Ann. Good day to you all. All right, so ladies and gentlemen, for tonight, we got a great webinar planned for you. Welcome to Market Analysis Live for Sunday, November 18th of 2018. This is George Papazov from Trade Pro Academy. I want to welcome you all aboard. This is Market Analysis Live number 256. We've been at this for a long time on a weekly basis, and this is what we do on a weekly basis every Sunday at 8 p.m. Eastern with our team. So first and foremost, I want to welcome some of the new members on board. Welcome to the family. Welcome to all of our recent subscribers who are attending this for the very first time. All right, and we're going to caption the first 10 minutes or so. We're going to stream it live to YouTube as a little preview and to inform everybody on the upcoming week, because it is important. We have some very important economic events and market developments as well. So we'll get started. And if you guys have any questions, ask as we go along. We will answer the questions throughout the webinar regularly. So don't fear, always ask. I'm here for you. All right, so let's get started first and foremost by saying this. It is going to be Thanksgiving officially in the United States this upcoming weekend. So happy early Thanksgiving to all of you trade pros. Wishes you happy Thanksgiving. So what's going to end up happening for Thanksgiving is that the stock markets are actually closing on Thursday, November 22nd. So the full day of the markets will be closed, and then we close early at 1 Friday. So stocks will be closed during these times. Futures will work on Friday. They won't work. They'll be open. They're always going to be working until the very end, but there's going to be lower volatility. So really in today's Market Analysis Live, you got to remember this upcoming week, we got 3 days. We're going to work it within the 3 days. The last 2 days, the opportunity is very slim. There's a lot of lower volatility and lower volume, lower participation from institutional traders. All right. So what we got as an opportunity here is something called the turkey trade. I don't know if any of you have heard of it. Thanksgiving. All right, in 2017, Thanksgiving week, the stock market rallied 0.9%. All right, the Wednesday before Thanksgiving, it was down slightly, and the Friday after Thanksgiving, running down the columns, you'll notice here that there's pretty strong seasonal effects on the turkey trade. And the turkey trade basically is buy the stock market going into the week of Thanksgiving and sell it before Thanksgiving. Holding on to it for the Monday after sometimes disperses those results and really throws them off. So really the idea here is buy it and going into the Friday before 1 p.m. on the close, sell it in anticipation of that. So it's kind of buy the rumor, sell the news trade. That's an opportunity that's laid out there on the table for you guys. It's a seasonality trade on average. During Thanksgiving week, going all the way back to 1950, the stock market has rallied 0.7 point, which is pretty good. Wednesday before Thanksgiving, the Wednesday before Thanksgiving purchasing it would have yielded about 0.3%. And last but not least, the Friday after Thanksgiving is as well 0.3%. And you could see that the Wednesday before has about 76% gain frequency along with the Friday after Thanksgiving. So the turkey trade's got a pretty decent return with a pretty high expectancy that takes place. This is something you should watch for. A lot of traders, because we're entering or have entered into pretty bearish and downside sell pressure like market conditions. So is the turkey trade going to be enough to turn this around? And we're going to talk about that throughout the week. I'll give you guys, throughout the webinar rather, I'm going to give you a lot of evidence for and against, and then we're going to conclude it by telling you what we think is the best course of action. And of course, we're going to also look at the institutional trading reports, see where the institutional money moved and repositioned to and from. And that's a really, really important indication as to what the next course is here for the stock market. All right. So I want to wish you guys a happy early Thanksgiving. This Sunday coming up, I don't know, do you guys want to do Market Analysis Live? I mean, I know there's a lot of members who are not celebrating it, and we're not in Canada. We already We don't do Thanksgiving on the this week coming up. We've already done it. So, I mean, up to you guys. I can still do Sunday. I'm going to have to post a video for you anyways. So I'd be more than happy to do it live. So let's just say it's on for now. All right, let's carry forward here and let's keep going. You can see the S&P 500 here index over the course of the last 5 days. Monday, we had a pretty drastic sell-off in the S&P 500. Tuesday, we went flat. Wednesday, we continued down to week session lows. And then we put a new weekly low on the Thursday, only to rebound a little bit on the Friday. For the week, we're still finishing red, despite the fact we had a little bit of rebound. Just to take you through and recap the week that just passed, Saudi Arabia announced that it's going to slash its oil exports unilaterally, okay, by 500,000 barrels a day. That happened on Monday, and that was really what put a bid into the oil market. But at that same time, the stock markets were dropping quite a bit. So that was an interesting event. And then on Tuesday, we had Japan Central Bank announcing their latest monetary report. And then on the Wednesday, we had some more developments out of the Italian Premier Luigi Di Maio and the latest budget. And then Thursday was really the biggest event of this past week. We had a drop of 1.5% against the dollar on the pound. All right, on reports that Brexit secretary has left and Theresa May's proposal or draft agreement with the European Union would not be endorsed by her own parliament. And then we had the 48 no confidence votes reached, and that's coming up for a vote this Tuesday of this week. All right, and then Friday we had a little bit of a sell-off on NVIDIA, and that was fueled by cryptocurrency selling as well. NVIDIA announced that, less mining of cryptos has resulted in less sales for their video cards, and the stock just fell off along with Apple. So it's been a very interesting week. This week coming up, we'll talk about it in a moment, actually. Let's review some of the economic calendar and what has taken place the past couple of days. Monday, obviously, there was nothing. It was Veterans Day, obviously. Tuesday, we had average earnings index out of Britain. In the United States, we had some inflationary data on Wednesday at 8:30 in the morning, and we saw inflation right in line with what we expected. This was a really important report, and economic inflation is a very strong report that's followed very closely by the Federal Reserve and traders on indication of what that's going to mean for interest rates going forward, how the Fed will likely adjust, how they'll factor that into their economic outlooks and their monetary policy in line with expectations. And so not really much happened there on the Wednesday. It was expected to be a very important report, came out as expected. Therefore, it was already baked in. 6 p.m. on Wednesday, November 14th, Jerome Powell spoke, and he pretty much stayed in line, rather, with a fairly hawkish tone. All right, Jerome Powell is pretty, he's apologetic about it. In fact, he doesn't even acknowledge this market sell-off. Neither has the Fed. And in fact, that fuels this market sell-off that much more, because the Federal Reserve is not looking at the stock sell-off as a troublesome event, which means they're going to continue to raise rates and unwind their balance sheet, which is what's causes sell-off. Right? Large part of it was the Fed balance sheet unwind, which we did a special webinar with our members on. And also, in addition, there was a blackout for buybacks in October. As companies are reporting they can't buy back their own shares. And so now that we're past that period, there's a great question looming here, whether or not the stock market's going to continue a leg lower for this week. All right, here's the trouble. We're running into a seasonal period of strength. Typically, the year ends out on positivity and optimism, and the market tends to rally on that optimism because you have the holiday season coming up. You have a lot of retail spending and Black Friday this week, and then Cyber Monday next week. And once we start to see some of those results and polls coming in, if the consumer season or the consumer demand drives higher this year than past year, and there's stronger sales throughout the holiday period, then you can bet the stock market's going to rally pretty greatly. All right, right now it's a little bit beat up, but it's on a turning point. Continue to drop, or we take a turn and rebound a little bit into the end of the year. And I got some very important stuff to show you coming up in this webinar. and I pulled some reports from Citigroup's research where they asked their fund managers, what do they think is going to be the best asset in 2019? What's going to be the worst asset in 2019, and whether or not they expect a recession. So we're going to cover that in just one moment. All right, so this upcoming week, what should we watch for as traders? We don't really have much on Monday, November 19th. Thursday, markets are closed. We don't have anything. Tuesday, we have some stuff out of the UK. Really, the only report that we have out of the United States is the core durable goods orders, month over month, and that comes out Wednesday morning at 8:30. Then we end the week off on some Canadian statistics. But you're gonna have a slow week here because of the economic events. So here's what you could expect as a trader. You could expect to see markets respect technical levels. All right, you can expect to see a little bit slower moving markets, lower volume, maybe lower volatility, and that's sort of the base case. Anything above and beyond that becomes more opportunistic for day traders, obviously, but it's not the expected scenario. We're going into a period where a lot of institutional money is expecting, because we're entering into a strong seasonal consumption period. And as you guys know, about 80% of the GDP, the United States, is driven by consumption. All right. That's what we got coming up next week on the report. On Tuesday, Donald Trump is expected to release a comprehensive report on the Saudi Arabian involvement and whether or not MBS, Mohammed bin Salman, was involved in the killing of journalist Jerome Khashoggi. All right, and that's going to be an interesting report because there's a lot of depth to the relationship between Saudi Arabia and the United States, and it goes really far back. But to make it simple for you, the government right now is pressuring Donald Trump to implement legislation that will limit arms sales. Remember, there's a massive arms deal between Saudi Arabia and the United States. Saudi Arabia buys a lot of arms and ammunition from the United States. And that's a huge contract. And Donald Trump has said it's created 100 jobs, 1,000, 1 million jobs. He continues to quote that number bigger and bigger. But I'll tell you this, there's a lot of pressure now on the U.S. government to take action. Very important what happens here on Tuesday. What you need to watch on Tuesday is this report's outcome, and we're going to cover this with you, and also how it's going to impact oil, all right, and the relations between U.S. and Saudi Arabia, and most importantly, the U.S. dollar. All right, that report comes out on Tuesday, so we'll give you guys more information as it becomes available. Okay, so with that being said, let's carry forward for the rest of the webinar. Any questions so far, guys, in the trading room? Awesome. That's the first part of the webinar. We're going to now go through and I'm going to show you the Citigroup research of fund managers and what their expectations are for 2019. And then I'm going to go and show you the last week's commitment of traders reports and what institutional traders have done, how they've adjusted their portfolios, and what that could mean for this week. And ultimately, we're going to answer the question today of whether or not this market's about to rebound at this level or continue lower. And that's really what the most important part is. We're either at the beginning stages of a rally or the later stages of a sell-off continuation. And that's what we need to decide. We're going to look at that data and give you guys the verdict. All right, so for YouTube, thank you for tuning in. I hope you enjoyed this little preview. We do this every Sunday at 8 p.m. Eastern on Market Analysis Live with all of our members. Any members on either Swing, Pro, or Elite are all entitled to access to this special report. We do it on a weekly basis. It's very interactive, and it's archived for convenience if you happen to miss it. So thank you so much for tuning in. Have yourself a great day. We'll see you tomorrow morning at 9 a.m. for the open. Take care, YouTube. And thanks. Jennifer, what's your name, Jeno? What's your actual name? Yeah, Saudi Arabia buys a ton of debt from the United States, right? That's how it goes. That's sort of the same arrangement that they have with China, the U.S. and China. Yes, they export a lot to the United States. China does, and that gives them U.S. dollars, which in turn they use those U.S. dollars to buy debt, to buy treasuries in the U.S., to finance the operations, balance the budget. If you guys look at what's happened recently that Saudi Arabia is not happy about is the fact that the United States has now become the number one producer of crude oil globally. They've more barrels per day than Saudi Arabia, 12 million. Interesting stuff happening. Anywho, guys, take care. Have yourself a great day. Trade Pros, give me a moment. Just going to end the broadcast here on YouTube, and I'll be with you. We'll continue forward with the webinar.